Banks have been around for centuries. They hold your money, move your payments, and decide who gets credit. But what if, within the next decade, that entire system is replaced, not by new banks, but by code? Enter stablecoins. Unlike Bitcoin or Ethereum, stablecoins are designed to stay steady. They're digital currencies tied to the value of the US dollar, the euro, or even gold. No wild swings, no lottery-style crashes. Just money that moves instantly across borders without the middlemen. For the first time in history, you don't need a bank to store money. You don't need a bank to send money. You don't even need a bank to earn interest. All you need is a smartphone and an internet connection. And here's the shocking part. This isn't theory. It's already happening. Millions of people in unstable economies are using stablecoins instead of local banks. Billions of dollars move through stablecoins every single day. So the question isn't if they'll challenge banks. The question is when. And some experts believe the answer is clear. By the year 2030, stablecoins could be the new banks. Picture this. Maria lives in Argentina. Her paycheck loses value almost the moment it hits her bank account. Prices at the grocery store rise week by week. Saving in pesos feels like trying to hold water in her hands. It slips away no matter what she does. So Maria makes a choice. Instead of leaving her money in the bank, she converts it into stablecoins tied to the US dollar. Overnight, her savings stop melting. With a few taps on her phone, she protects her family's future in a way her local bank never could. And she's not alone. From Venezuela to Turkey to Nigeria, millions of people are doing the same thing. For them, stablecoins aren't a curiosity. They're survival. Banks. They've become irrelevant. Why stand in line, fill out forms, and beg for access when you can move money instantly, securely, and globally from the palm of your hand? For people like Maria, the bank branch on the corner isn't the answer anymore. The answer lives inside her phone, borderless, permissionless, and outside the control of governments that keep breaking their promises. Stablecoins aren't just a new form of money. In places where trust in banks has collapsed, they are the bank. Here's why stablecoins are so powerful. Banks are slow. A wire transfer can take days. Fees pile up at every step. If you're sending money overseas, you lose a chunk to middlemen before it even arrives. Stablecoins move differently. They travel at the speed of the internet. Send a payment from New York to Nairobi, and it lands in seconds, not days. Fees. Sometimes just pennies, no matter the distance. And then there's access. Billions of people worldwide don't have a bank account. No credit card, no savings account, no way to store or transfer money securely. Traditional banks see them as unprofitable, so they're locked out of the system. Stablecoins change that. If you have a smartphone, you have a bank. You can hold money, send money, even earn interest on money, all without paperwork, without permission, without waiting in line. Think about the scale of that shift. For centuries, banks have acted as gatekeepers. They decide who gets in and who stays out. Stablecoins break down the gate. And when billions of people suddenly get direct access to global money, that doesn't just challenge banks. It rewrites the rules of the entire financial system. And make no mistake, banks are scared. For centuries, they've had a monopoly on money. Want to get paid? You need a bank. Want to save? You need a bank. Want to borrow? Again, the bank decides. Every transaction, every paycheck, every mortgage passes through their hands, and they collect fees at every step. Stablecoins break that power. They don't ask permission. They don't shut down at 5 o'clock. They don't freeze your account because of paperwork. They do in seconds what banks take days, and they do it cheaper. That's why regulators are suddenly paying attention. Central banks warn of systemic risks. Governments talk about financial stability. But let's be honest, much of this is fear. Fear of losing control. Fear of watching centuries-old institutions become irrelevant. Already, we've seen attempts to slow things down, tighter regulations, investigations, even proposals to ban certain stablecoins. But the genie is out of the bottle. Billions of dollars move through them daily. Millions of people rely on them. The momentum is only growing. Banks are right to be nervous. For the first time in history, people have a real alternative. And if stablecoins keep scaling, the question isn't whether they'll compete with banks, it's whether they'll replace them. Here's where the story gets even more interesting. It's not just individuals in struggling economies using stablecoins. Big players are paying attention too. Major corporations are experimenting with stablecoins for cross-border payments. Why? Because they're faster and cheaper than the banking system. Instead of waiting 3 business days and paying a stack of fees, a company can move millions across the world instantly with full transparency on the blockchain. Even governments are watching. Some are quietly testing stablecoins to distribute aid, pay contractors, or settle international trade. For countries locked out of the global banking system, stablecoins offer a lifeline, a way to connect to the financial world without relying on institutions that shut them out. And then there's everyday commerce. Merchants in Asia, Africa, and South America are beginning to accept stablecoins directly. No bank terminals. No credit card processors. Just fast, borderless money from buyer to seller. Each new use case chips away at the old system. Bit by bit, the role of the bank shrinks. Because if companies, governments, and merchants all realize they can skip the middleman, what's left for banks to do? The very institutions that once defined money could find themselves fighting for relevance in a world that no longer needs them. Trust has always been the foundation of banking. You deposit money because you trust the bank will keep it safe. You borrow because you trust the bank will lend fairly. But history is full of broken trust, bank runs, hidden fees, sudden freezes, and collapses that wiped out ordinary people's savings. Stablecoins flip that model. On the blockchain, every transaction is visible. Every dollar moving in or out can be traced. Unlike banks, there are no secret ledgers, no closed doors. Transparency is built in. And then there's programmability. Imagine your paycheck arriving not just instantly, but automatically splitting. Part into savings, part into investments, part into bills, all coded into the payment itself. Or imagine stablecoins programmed to unlock only when certain conditions are met, like delivery of goods or completion of a contract. No middleman needed, no disputes, no delays. Banks can't compete with that. Their systems are old, slow, and built for a different era. Of course, transparency and programmability don't solve everything. There are still risks, from bad actors to technical flaws. But compared to the opaque world of banking, stablecoins offer a level of clarity and efficiency the old system can't match. For centuries, banks told us to trust them. Stablecoins give us a new option. Trust the code. And that shift could be the biggest threat to banking yet. But before we declare the banks dead, we need to face the risks. Stablecoins sound unstoppable, but they're not bulletproof. Most of them are issued by private companies, which means they still require trust. Do they really hold the reserves they promise? Are those reserves safe? We've already seen scandals where stablecoin issuers were caught exaggerating their backing. Then there's regulation. Governments don't like losing control of money. If stablecoins grow too powerful, expect fierce resistance, new laws, tighter oversight, maybe even outright bans. Some nations are already pushing their own central bank digital currencies as an alternative. The fight for dominance has only begun. And let's not forget technology itself. Blockchains can be hacked, wallets can be stolen, code can have flaws. A single failure could wipe out billions and shake public trust overnight. Finally, there's the question of centralization. If just a few companies end up controlling the world's stablecoins, aren't we just replacing one kind of bank with another? These risks are real. They remind us that revolutions are messy, that every promise comes with a price. Stablecoins might replace banks, but only if they can overcome these shadows. If they fail, banks will remain, bruised but still standing. The battle isn't over. It's just beginning. Now imagine this. It's the year 2030. Paychecks don't go to bank accounts anymore. They go straight into digital wallets. Rent, groceries, subscriptions, all paid instantly with stablecoins, no middleman taking a cut. Businesses don't wait days for international payments. They settle in seconds. Families don't lose money on remittance fees. Sending funds across the world costs less than a cup of coffee. Loans aren't decided by a banker behind a desk. They're written into smart contracts. Collateral, terms, and repayments all enforced automatically by code. No bias, no paperwork, no waiting. For billions of people who never had access to traditional banks, this world isn't just more efficient. It's revolutionary. Money is no longer controlled by a few giant institutions. It flows directly, globally, and transparently. And the banks? They're smaller, weaker, scrambling to stay relevant in a system that no longer needs them. Some adapt. Others disappear. Stablecoins haven't just replaced the plumbing of finance. They've rewritten the very idea of what money is. It's not just a possibility. It's a trajectory. And unless banks reinvent themselves, by 2030, they may not be the ones holding your savings anymore. The question isn't if the shift will happen. The question is, are you ready for it? For centuries, banks have been the unshakable pillars of money. They controlled who could save, who could borrow, who could move funds. They set the rules, and the world played by them. But the rules are changing. Stablecoins have shown us that money doesn't need a middleman. It can move faster, cost less, and reach further than the banking system ever allowed. For the first time, ordinary people hold the kind of financial power once reserved for institutions. Yes, there are risks. Yes, the road will be messy. But history is written by the technologies we choose. And the truth is simple. If enough people choose stablecoins, banks will no longer be the gatekeepers of money. By 2030, the world could look very different. Paychecks, savings, loans, investments, all flowing through digital wallets instead of bank branches. A system built not on tradition, but on transparency, speed, and freedom. The question isn't whether stablecoins will matter. They already do. The question is whether you'll be ready when they move from the edges of finance to its very core. Because banks may have shaped the past, but stablecoins could define the future. And that future may arrive sooner than anyone expects.